Am I audible and visible? Please give me a reply. So we'll start in max 3 to 5 minutes. Please pass on the message to everyone that the class has started. We will complete so many important concepts in the today's class. Types of capital assets. Target number one, doing illustrations. After that, understanding the transfer concept, the most important one in the chapter, with good amount of illustrations, examples. And then I will also discuss about transactions which are not regarded as a transfer. In that basics we will cover. Next session we will complete the types of things which are not regarded as a transfer. Okay. In that I will also cover income from other sources. Almost 90% of IFOS chapter will be completed in section 47 itself. So please listen carefully to the today's session. Very, very important. Can we start? So I've given enough time. I think it's now good to begin. Yeah. Very good evening, everyone. Now, good evening for both of us. I'm in India now. So head back uh, just a day before. Today we are going to start off with where we stopped previously. Last 3.5 days before we gave a gap because of my travel from USA to India. So where we stopped from there we will start. First one, types of capital assets, is our targeted discussion, which we will complete. Once after the types of capital asset, next very important thing is the definition of the term transfer. Once the transfer definition is completed, we will learn also about what is not regarded as a transfer. When I am discussing what is not a transfer, I will complete IFOS chapter completely. Okay, except a few sections and discussion, main part of IFOS will get completed. Or I can tell this way: IFOS starts with 56, ends with 59. And 56, 57, 58, 59. So we will complete 56, we will complete 57. Okay, 58, 59, it is exclusive IFOS discussion, we will discuss there. But the most important one for the exams in IFOS is 56. That we will complete when we are discussing 47 section. Which one? 47. What is 47? What is not regarded as a transfer? Okay, so now we are going to first start with the types of capital assets. So what are all the types of capital assets? We are trying to understand through one very big illustration, a tabular presentation of what is a capital asset and what is not a capital asset. Shall we begin, everyone? And many are asking the question that in that trio series remaining, all the remaining lectures by tomorrow it will come. Means, what is the meaning? In PGBP, there are another 8 videos, eight not eight, sorry, 6 videos. In working capital, another 4 videos will be there. So those also will get uploaded tomorrow. Okay, well, so tomorrow it will get uploaded, and you have the access till 10th of July. Na? So whenever you want, you can listen and complete. Okay. Okay, well. Okay. So I can understand today is Sunday. Everyone will be in a different mood not to listen to the class. Okay. Ganesh, you can put me a message on WhatsApp directly. If you did not receive the book, immediately I will take the action and we will send it. If it is returned also, I will send back. So first you can please put a message to me directly. Okay. So I can understand Sunday. Okay. Everyone will be in a different mindset. So today also you kept the class. Reason for today's class is very clear here. I don't wanted to waste even a single day time if it is possible. See, emergency I will be in flight for around 2 days completely. Okay, so 2 days completely I was in flight. At that time I cannot take the class. So therefore 3.5 days gap has come. When there is a chance, let us complete. Okay, well? So I'm in India now. Yes, I'm in India. So no worry. From now we will be having classes on a regular basis, and moreover, I can also put extension. Now I will tell the details very clearly. Okay, before even going into that, let us first move on into our today's discussion called as types of capital assets. Okay, types of capital assets. Okay, see here, types of capital assets. Section 2 class 42A, read with section 2 class 42B, read with section 2 class 29AA, read with section 2 class 29B. Okay, and very important, notes is shared in the Telegram group as well also in our WhatsApp group. Have you all received our capital gains notes? Have you received the capital gain notes, everyone? Yeah. As I said, if it is not copyrighted, I have zero objection to share with you. Okay. So listen up. Listen. Actually, I was in a jet lag. I am getting sleep all the time because exactly when it was a night there, morning here. Exactly when it was morning here, night there. So to change that rhythm, I stopped sleeping during the night time. Sorry, in the morning times. So that's why I'm getting sleep now. That's why my face may be a little tired now. So please listen. But that activeness should be on the brain. I will be doing my level best. Okay, please listen carefully. Okay, ma'am? That's it. So 2-3 days it will get set. But still, that jet lag will be there. Horrible jet lag will be there once you travel and come. Because we will travel through the time cycles now completely. Different time cycles I will have the journey. So the problem. Okay. See here. Types of capital assets. See, I will explain this way. There are two types of capital assets. One is a long-term capital asset. Another one is a short-term capital asset. Or short-term capital asset, long-term capital asset. Any kind of asset which is not short-term automatically falls into long-term category. So there is no separate definition for long term. There is a definition only for short term. Anything which is not short term automatically falls within the ambit of long term. One point clear. So what is short term? Before going into that, when I say long term, short term or short term and long term, there are four concepts we need to read. Long term capital asset means what? Sorry, short-term capital asset means what? Short-term capital gains means what? Long-term capital asset means what? Long-term capital gains means what? So four things we need to learn. Short-term capital asset, short-term capital gain. Long-term capital asset, long-term capital gain. Okay. First, let us understand what is a short-term capital asset. Then we will be going into short-term capital gain. Then anything other than short-term capital asset will become long-term, and anything which is not called as the short-term capital gain will be the long-term capital gain. Okay. First, I will show you two definitions. Read this. 3 and 4 you read first. 3 and 4. Definition of long-term capital asset. Section 2 class 29 AA. Long-term capital asset means a capital asset. Okay, capital asset. Which is not a short-term capital asset. Which is not what term? Short-term capital asset. So which is not a short-term. First what we need to learn? What is a short-term capital asset? We should learn. Sir, anyway, next one. Definition of long-term capital gain. Long-term capital gain means a capital gain arising from the transfer of a long-term capital asset. So 3 is talking about long-term capital asset, 4 is talking about long-term capital gain. What is a long-term capital asset other than short-term capital asset? What is a long-term capital gain? Any gain arising out of transfer of long-term capital asset will result in long-term capital gain. Clear? Read short-term capital gain. Short-term capital gain means a capital gain arising from the transfer of short-term capital asset. So, four definitions set, 3 are dead easy. Number one, short-term capital gain. Number two, long-term capital asset. Number three, long-term capital gain. But what is very important, LTCA to understand, first we need to understand what is a STCA, such that anything other than STCA will become LTCA. Shall we begin? Let's start. See here. Please, everyone, see here. Before we start, like any other day, I have a habit of giving you a word of caution. Okay? Word of caution. Jagrata. Very important. Exam la, they will test your knowledge in all the angles. 8 marks question on capital gains means they will test your ability in understanding the duration of a capital asset and judging whether it is a LTCA or STCA, whether it attracts STCG or LTCG, rates of tax, other issues involved. So what is the first thing? First, you should have a comparison of timings and you need to tell whether it is a long-term capital gain or a short-term capital gain. Whether it is a short-term capital asset or a long-term capital asset. When you will know when you read this. So let's start. Short-term capital asset means a capital asset held by an assessee for not more than 24 months immediately preceding the date of transfer. So date of transfer you take. Today I transferred it. Okay. From there, immediately preceding 24 months. Okay, immediately preceding 24 months, it should be held by the assessee. It should be held by assessee. See, he did not use the word aggregate period of 24 months. When you say aggregate, I can hold it for 3 months, sell, again buy back, again hold it for another 4 months, again sell it, again take it back. Like that you can do. Clear, sir? Who will do like that, sir? If I buy something, if I buy something and sell, when I buy back, how can I buy the same? I will buy some other thing, na? See, fool only will talk like this again. You are my student, so I hope that you are having a lot of common sense. When it comes to shares in a company, whether you are holding shares, I am holding shares, the share of a company is a share only. Your share is different, my share is different, will not be there. For example, share price is 100 rupees means my share price is your share price are belonging to same company. Both share prices, yeah. Are you understanding or not? So there is no difference. And moreover, this is not like a vehicle where there will be a separate registration number where my share, my car is my car only. Though you are holding a Mercedes Benz, I am also holding same Mercedes Benz. Okay, I can't exchange my car with your car because my car has my required features. Like that, shares will not be there now. I will buy TCS shares today. I will sell and I will buy back after 10 days again. What I hold is a TCS share. Are you understanding or not? So what happens here? Housing Mukesh is a holder of share. I will buy a share today. 4 months I will hold. I will sell. Again after 2 months I will buy. I will hold for 8 months. Again I will sell. Again I will buy after 6 months. I will hold for 9 months. Aggregate period, if you see, 24 months is crossed. But point is not about aggregate. Point is immediately. Other importance of the word. So every word is important. And what is the significance of the term immediately? Don't go for any 24. Immediate preceding 24 months, so you should hold it. Okay? That is number one. Next, provided that, exception started, provided that in case of a security listed on a recognized stock exchange, and what security? In case of a listed security, that is meaning, or unit of UTI, or unit of UTI, or unit of a equity oriented fund, or zero coupon bond. Provisions of this clause shall effect, and this clause will be taking effect. Taking effect means will come into action. For the words 24 months, 12 months should be substituted. And what is the meaning? If I am holding a share, if I am holding a listed share, not share, listed debenture, any listed security, or units of UTI, or units of equity oriented fund, or zero coupon bonds, or zero coupon bond. But here what you have to understand, first case, like he said, security listed on a recognized stock exchange. Security listed on a recognized stock exchange. Next, unit of a unit trust, unit of a UTI. They are listed or unlisted, or they did not tell. Any kind will be coming into short-term capital asset, provided your holding period should be substituted with the 12 months instead of 24 months. Means, I will give you two examples. Mr. A is holding shares of TCS. Mr. A is holding a residential house property. Okay, residential house property, I held it for 17 months and I am selling. 17 months and I am selling. I am holding a shares of TCS. I held it also for 17 months and I sold it. Residential property sale comes under short term. Shares will come under long term. Why? If it is a residential property, it does not come under listed security, it does not come under unit of UTI, it does not fall under unit of equity oriented, it does not fall under zero coupon bond. Therefore, in that case, 24 months holding period only will make a short term. Within 24 months only will make a short term. Other than that, any UTI unit, security, listed security, etc., 12 months only. And in this example, what is the meaning? 17 months of a residential property makes it short term. 17 months of a security listed will become long term because it crossed the 12 months period. First of all, everyone please give a reply. Understood clearly or not? Everyone, repeat. Okay, clarity of thought process. Here, doubt will come. Definitely, everyone will have a doubt. Okay, that doubt also will clear. Before going into that, read point A, B, C. Read point A, B, and C. I will give you 3 minutes time. Read properly. This is the last time. That's it. Like that, you should read when I give a time. Ready, everyone? Next one. Tabular presentation, making a broad analysis on what is a transfer and what is not a transfer. Okay, or what makes a short-term capital asset, what makes a long-term capital asset. Okay, let us understand. Tabular presentation. First, transfer took place. Forget about this, yeah. I don't think that institute will still ask questions on this. 1 year before, I mean, last attempt when I am writing this note, chances are there. Okay, at least now they will not ask these questions. Now they will ask only on or after 23/7/2024. Okay, even if they ask very easy, I will tell both sides. First point number one. Okay. Listed equity or preference shares comes under listed security category, 12 months. Listed debentures, listed security, 12 months. I am breaking up the word. Listed security is a general word. Let us break into as much as possible. Listed government securities and derivatives, 12 months. Listed units of UTI. They said units of UTI, that's it. Listed or unlisted are both. So 12 months. Units of equity fund, listed or unlisted, 12 months. EOF means equity oriented fund. Next one. Listed units of a debt oriented fund, 12 months, because it comes under listed security category. Unlisted units of debt oriented fund, this is not governed by units of equity oriented. Units of equity oriented fund ke we read about 2 points. Equity oriented fund units, that's it. Listed unlisted they did not tell, so both. But debt oriented fund is not given in the 12 months category. So if it is a listed debt oriented instrument, then 12 months. If it is unlisted, then 24 months category it will be falling into. Okay. So the listed units of debt oriented fund and unlisted units of debt oriented fund, one is a short term capital, another one is a long term capital. And listed units of a debt oriented fund is not governed by the short term capital asset definition, and thereby 12 months period will be applicable and 24 months for the unlisted part. Okay, what? Next. ZCB they said. That's it. Are they listed or unlisted? Again, they did not tell. Listed ZCB or unlisted ZCB, 12 months. Next. Sir, what more we are missing? Equity preference unlisted. Listed securities we read. Unlisted equity shares, then what will happen? 24 months. Unlisted debentures, 24 months. Because you have seen only listed debentures, listed equity. Next one, unlisted government security, 24 months. Immovable property, 24 months. Any other movable property, 24 months. This is how you need to make an in-depth analysis out of this part. Okay. So what is the simple summary? If it is a listed stock market instrument, if it is a listed stock market instrument, it is always 24 months. Okay. It is always, it is always 12 months. Okay. Other than that, units of UTI, listed, unlisted, 12 months. Units of equity oriented fund, listed, unlisted, 12 months. Zero coupon bond, listed, unlisted, 12 months. Anything other than these will go under 24 months category. Will go under 24 months category. If you are not holding for 24, short term. If you are holding for more than 24, long term. Because it is not qualifying as short term, goes into the category of long term capital asset. Okay, so first of all, I want one answer from all of you. Did you understand this table properly? Yeah, everyone. Did you understand this table properly? Okay. Observe the table. Complete it fast. Completed? Please give a reply once you are done. Okay. Now, let us start solving question that came in exam. Okay. Already this question came in examination. Let us see. I forgot to tell you. If it is if the transfer took place, not acquisition took place, if the transfer took place before 23/7/2024, okay, before the cutoff date of 23/7/2024, if the transfer has taken place, then what will happen? Let us see. Okay. See, in case of every other thing, it is same 12 months. There is no change. But listed units of debt oriented fund, 12 months na, if it is before 23/7/2024, 36 months, so we need to substitute. Unlisted units of debt oriented fund, 36. Simply to tell, debt oriented funds previously, whether listed or unlisted, 36 months. Now they changed it to listed na 12 months, unlisted 24 months. Next, what is the next difference? That's it. Those are the main differences that one has to observe. These two are the most important observations that one has to make. Listed units of debt oriented fund, unlisted units of debt oriented fund. Previously it used to be 36 months. Now it was changed to 12 months and 24 months respectively. Okay, well, let us move on into the next one. See, let us read the question. State giving reason whether the asset is a short term or a long term in the cases given below. Number one, X purchases a house property on March 10th, 2023 and transfers it on June 6th, 2024. What is this house property? House property means it comes under security category or other category, other category. Other category, what is the time limit? 24 months immediately preceding the date of transfer. What is the date of transfer? June 6th, 2024. Go back 24 months. Okay. In the 24 months only it happened. Na? This will be, see here. When I acquired March 10th, 2024, transfers it on June 6th, 2024. House, minimum holding period, 24 months required. Period of holding, 14 months and 27 days. Since it is not 24, nature is short-term capital asset. Second, X purchases listed shares of an Indian company on May 10th, 2023 and transfers it on August 6th, 2024. May 10th to August 6th means it is a 12 months or more than 12 months. It will be more than 12 months. Therefore, long-term capital asset because listed shares will come under 12 months category. Next, Z acquires unit of equity oriented fund. Equity oriented fund units whether listed or unlisted, short term within 12 months. So acquired on August 7, 2023 and these units are transferred on 10th August 2024. It is 12 months or more than 12 months or more than 12 months. That's it, long term. Next, X purchases diamonds. It doesn't come under security category, general category. On September 12, 2022, and gives the same to his friend B on December 31st, 2022. B transfers the asset on October 2024. This is the question. Okay. First point number one. X purchases diamonds on September 12th, 2022. Gives the same to his friend B on December 31st, 2022. So friend they made a gift. Okay, wow. So first how to understand how the holding period. Diamonds will come under other movable asset. Other movable asset. In that category it will fall. So that will fall under other movable assets category. Okay. Other movable assets category that will be falling into. So you observe clearly here one important point. A purchases diamonds on September 12th, 2022. Gives the same to his friend B on December 31st, 2022 within the same financial year. B transfers the asset on October 2024. This is the point. See, first point number one, whether what is the time limit to consider whether short term or long term. See, in case assets acquired by way of gift, section 49(1) will attract Period of holding of the previous owner shall also be considered. Sir, I did not understand this particular point. You may not. Reason, we did not complete section number 49, subsection number 1 Okay, we did not cover. So therefore, if you could not understand this B point, no worry. We will be discussing about this in detail when we come to section number 49, subsection number 1. So leave it. Go to the next one. C purchases unlisted shares in a company on November 1st. Company transfers the shares in the name of C on Jan 5th, 2023. Jan 5th, 2023. The shares are transferred by C on December 20, 2024. First, unlisted shares, what is the thing? 24 months. Period of holding, more than 24 months. Why it is more than 24 months? When I purchased November 1st, 2022. When I transferred 20 December 2024. So if you observe November 21st to November 21st, 2022 to November 21st, 2023. From there again 1 year if you take, this date will come. What date company entered into the registry is not important. The day on which I purchased it is important. So it should be acquired by you 12 months before the transfer if it is a security or other things. Unlisted shares 24 months category will apply. Here it is held for more than 24. Therefore, it will be treated as a long-term capital asset. So this is the numerical illustration or illustration way of understanding the same point called as definition of a short-term capital asset. First of all, everyone please give a reply and then you please see the illustration for 2 minutes. We'll continue with the next one. Please give a reply whether you understood or not. Please see the question, please see the answer. Okay. Sir, I have given enough time. I have given 2.5 minutes time for you to read everything. Except B point, please read everything. B point, please don't ask any question now because you don't know what is the period of holding by previous one or all these things. We did not discuss actually. So therefore, this question came in exam. Exam time you should learn everything now. But at this moment you may not understand the fourth bit. Okay. Last bit is very important because when company transferred in your name is not important. I mean to say date of transfer you check 24 months prior, sorry, more than 12 months prior if you are holding it, if you are purchasing it, that's it, enough. Legal ownership when you got is not the intention. The Companies Act will take care. Income Tax Act, I don't want all those. Income Tax Act, when you got a right to receive everything, that day will be important. Okay, everyone clear? Okay, that's it. So now we completed another segment in capital gains, one big segment called as types of capital assets. Completed. Okay. Next, the king of this chapter. Okay, why I call this king na? This segment, if you complete, you will complete 95% of capital gains. Really, yes, sir. Really. I'm not joking at all. Okay. If you properly read, that is most important line. If you properly read this concept, you will complete 95% of capital gain, 90% almost. If it's not 95, 90. Why? Listen. Transfer concept is having four segments. What is a transfer? What is not a transfer? What is indexation during transfer? And what are the rates of tax on transfer? These are the segments in capital gains. What is a transfer? We are going to read today. Now we are going to read. What is not a transfer? Next two classes we will read. In that, when I say today and the next two classes, in that we will complete IFOS also. So bonus for all of you is, if you are going to miss the lecture for today, tomorrow and day after tomorrow, I mean not tomorrow, day after tomorrow technical, next two sessions until this class and next two classes of DT if you miss, okay, happily turn to east, shout Govinda, Govinda, over. Capital gains chapter over, IFOS over. Because by the time you don't learn transfer concept properly, or what is not a transfer properly, I'm telling very, very clearly, waste of time. Don't listen to the lecture. Happily sit at home, sleep happily. Life is beautiful. Okay. Efforts will be there only when you understand what is a transfer, what is not a transfer. If you know, then I will bypass through the capital gains chapter and we will go to IFOS. 56 section we will understand. Are you clear? Everyone understood? I'm really saying all this. You know about me very clearly. If I say I will put it live, I will put it. If I say it will be available, it is available. If I say this will take time, it will take time. If I say it is difficult, it will be difficult. These are difficult. I'm not telling these are easy. These are very technical, logical, and difficult. When if you read in a proper way. At all, I don't want, sir. Question bank, question solving is important for me. For you, this may be completed in 1 hour, 2 hours also. I'm not talking about a person like you. I'm talking about a person like my students. Means if you are intended to learn the concept properly and then do the questions, definitely it will take time. Definitely this is a difficult segment. Reason we will read 2 class 47, section 47, read with section 155, subsection number 15. Are you understanding? Read with section number 155, subsection number 15. Read with section 49.1. Read with section 49.4. These many interconnected sections will come. How will you complete in 1 hour? Then you are not completing the concept. You are completing the exam question, which is not our intention here. If that is your intention, happily close the live, sit and do the question bank questions. Further communication is not required for you. Clear, everyone? With this, shall we start? Are you understanding? Further communication is not at all required. Okay? You can happily go with alternatives. But if you wanted to learn everything with interlinking and then you want to do questions, then this is the right place. Well, so what you can do now, see, I will ask you a point. Okay, I will tell you one point. You check. You check. We will complete 47, read with the 49.1, read with the 49.4, read with the 115 subsection number 15. You call any of your friend who is not attending our live. I'm telling you seriously. Okay, you call any of your friends who are not attending our live but normally studying DT. Ask them questions which I asked you in the class. Not today. Today's class is easy only, and not easy, manageable. Next class onwards, what is not a transfer will start. Then interlinkings I will tell you with bare act proof. At what section, what subsection is linked to what proviso, what explanation. And with exam question. Then you ask them, okay, what is the interlinking between this and this? Okay. you will only understand what is the importance of these classes. Our intention was to solve question bank. Our intention was to do analysis and then do question bank. You will have a clarity of thought process. Clear? So Monish, from CA final question you are asking, refresher batch. Na? I will come with the timings tomorrow. Tomorrow I will make a video and I will put it on the YouTube. You will have the update. Okay. I think we are good to start, right? Let's begin. See, definition of transfer. Definition of what? Transfer. Why we have to read this? Let us first have a clarity. Okay, let us first have a clarity. See, charging section number 45 says that any profits or gains arising from transfer of a capital asset in the previous year shall be deemed to be the income of the previous year in which the transfer took place. Other things I left. Main content I am reading. And when the capital gains tax will come into picture, there should be two very, very important conditions. There are so many conditions. Two most important conditions are there. First, there is a capital asset. We read what is a capital asset. We read what is not a capital asset also. Okay. So we read what is a capital asset. Capital asset means a property of any kind. We already read. So first it should be capital asset. Second, it should be transferred. Capital gains should be arising from the transfer. They did not use the word sale because sale is a very small word. Transfer is a very big term. Not in terms of size I am talking. I am talking about the coverage of the concept. Sale means what? There is a buyer, there is a seller. There will be agreement between both the parties, whether oral or in writing. They will agree to some consideration and they will sell. It is sale. But there can be any number of concepts, okay, other than sale, but still there will be a ownership transfer. What it is only we are going to discuss in the today's class. Okay, so that's why this has become important discussion. So please listen carefully. Okay, what we are going to read. Definition of transfer. Transfer in relation to capital asset. Transfer in relation to capital asset. Okay. So, sir, what is the significance? What is the significance? Transfer in relation to a capital asset includes. Hey, again, includes. What does it mean? Not only these are the most important ones to remember. That's all. These are examples given. Okay. Whenever in the definition you see the word includes, definition of section 2, in that class 47, they use the word includes. Why the word includes will come? Includes will come for two important reasons. Number one, if the lawmaker intention was a liberal intention. Liberal means what? The list I am giving is only a general list. There can be more other than this. I am generally giving you a basic list of some things. For example, sale, extinguishment, exchange, extinguishment of rights, compulsory acquisition. These are all transfers or not a transfer or transfer. These are the only transfers. No, there can be other things also. But it includes these. Okay. And second very important thing. Always remember in law, I'm not talking company law, I'm talking any law, including income tax. Whenever the term includes comes na, lawmaker will sometimes include fiction into the definition. When I use the word means, fiction can't be used, but includes ki fiction also can be used. So what is a fiction? Cinema la fiction will be there na. Fiction means what? Fiction means something unreal. They will project on the screen, making us to believe it is true. Like characterization of certain things like Harry Potter. Some characterizations in some movies. Those are all fiction, fictitious characters. Those are not real characters in real life. Okay. Unreal thing, showing it, projecting in such a way, it will look like a real thing, is called as a fiction. Here, they will use cinematic fiction. Here we are using a legal fiction. When fiction is used, includes definition. Okay, shall I tell you one point? Listen. I will give you an example. Okay. See. point is, see here, I will give you an example. Okay. I am having, I am having a document with me. Okay. With that document, I can buy an asset. With that document, I can buy an asset. And if I show this document, they will give me asset. Okay. And I have a right to buy an asset. Now what I did, I have given this to some other person. Okay. What I am doing here, I have no asset. I have a right to buy an asset. That's all. In reality, I don't hold any asset. I have a right to buy. I could not buy that. I don't have money. I transferred it to some other person. Okay, well, that fellow will buy. What I am giving him, I am giving him a right to use a right to purchase a particular asset. I have given him. You are actually, lawmaker will tell, you are not giving it, you are transferring it. Why it is a transfer? Because extinguishment of rights. Extinguishment of rights. Extinguishment means losing, completely removing. Your rights are getting torn. In that case, it also results in transfer. Rather than understanding this way, line by line, I will explain each and every topic. Then mind blown, you will really understand what is the significance of section 2 class 47. Okay, let's read. Transfer in relation to capital asset includes sale, exchange, relinquishment, or extinguishment of any rights therein, or compulsory acquisition under any law, or in case where the asset is converted by the owner thereof or is treated by him as stock in trade, such conversion or treatment. Next, the maturity or redemption of a zero coupon bond. Next, the transfer involving allowing of possession of any immovable property to be taken or retained in a part performance of a contract. Any transaction, bracket content I am not reading, which has effect of transferring or enabling the enjoyment of any immovable property. Okay. I will ask you, I am giving you 3 to 4 minutes time. Everyone in live, honestly, you should do one thing for me. What you have to do from beginning, section 2, class 47, till ending, explanation 1 and 2, you have to read. First, read it. Take 3 4 minutes time. I will be too much happy for you to explain the concept provided you read them. Okay, read it first. Everyone completed reading? Everyone give a reply. Completed reading? Okay, let us begin. See, when I start now, please listen carefully. Important, I said, most important for this chapter. Okay, see, definition of transfer. What is a transfer? Transfer generally we will give to someone transfer. No, need not be. Okay, need not be. Definition of a transfer. Transfer in relation to a capital asset includes, okay, includes sale, exchange, relinquishment of an asset. Okay, let us understand the words one by one. Definition is inclusive in nature, means the list given are not the only ways of transfer. Those are one of the ways of transfer given. Definition is applicable only if such transfer is in relation to a capital asset. Okay, next. Sale is a transfer. We already read the first line as sale, exchange, and relinquishment of the asset. So first let us understand how sale is a transfer, how exchange is a transfer, how relinquishment is a transfer. Okay, let us see. Sale. Sale is a transfer. How? Sale, there will be two parties. Seller, buyer. There will be an agreement between them. And both are competent parties under Contract Act. They are not below the age of minority, etc. Consideration and transfer of ownership. So, seller and buyer, two parties are there. There is an agreement, competent parties, consideration, transfer of ownership. These all characters will make sale. Next, exchange is a transfer. Exchange is a transfer. Let us see what it is. There are two persons. Number one is a person one. Number two is a person two. Person one will give property to person two. Person two, instead of giving money, he will give another property of some other character. Some other character. Sir, this is a barter system, sir. Barter system, how it is possible, where it is permitted, nowhere barter is permitted. No, don't think in that way. You have to understand not as a barter exchange, you should understand as a commercial exchange. Let me give a super duper example for that. Okay, conversion of preference shares into equity shares. Why you will convert? If I issued convertible preference shares. If I issue convertible preference share. When I issue convertible preference share with a life of 5 years, 5 years he will hold it as a preference share. 5 years after, what he will do? He will give that preference share to the company. Company will give him equity share. Okay. And what is happening here? Exchange is happening. So that comes under transfer. Really, if I give you a preference share and if you give me equity share, really I'm making any sale? No, there is no sale. There is only exchange. Exchange is a transfer. No, not a transfer. But I will create a fiction by using the word includes, saying that even though really exchange is not a transfer, we included it. The meaning of the term include. That's why they use the word includes. And they wanted to bring something which is not a transfer into the ambit of transfer. That's why they use the word includes. Okay. Next. So there are two persons, person one and person two. Person one transferred property, person two transferred another property. Conversion of preference shares into equity share is a classic example. Next one. Relinquishment is a transfer. What do you mean by relinquish? Withdraw, abandon, or cease to hold. Okay, withdraw means I'm having a right on that. Now I'm not having. I'm moving out of it. It's called as a relinquish. Relinquishment should be in relation to an asset. In case of relinquishment, the asset will be given up by the person and continues to be held by some other person. Some other person. Sir, I will make you understand the meaning. Listen carefully. Okay? See, I am holding a document. What is this document? This document, if you show, you will have a right on that. You will have what? Right on that. Okay. What do you mean by right on that? For example, I have a rights offer letter. I have what? Rights offer letter. If I have a rights offer letter, what is the advantage? I have a right to buy the shares in a proportion 2 is to 3 or 1 is to 5 or 5 is to 6 or some ratio. Rights shares I can buy if I have a rights offer letter with me. Why I am telling this much confidently? With the intention that every student might have already read right shares concept in company law. I explained there very clearly. Rights shares are not given in terms of shares. They will be given in a ratio to the existing shares. For example, 1 is to 3. What does it mean? If anyone have 3 shares existing, he will be getting 1 rights share. That's the meaning. Everyone answer. Understood or not? Okay, sorry. So I will give you a super example. Okay, there you will understand. Okay, there only you will understand the concept. Okay, listen. Definitely will learn something new. Okay, my guarantee. You will only put the message in chat message box now. Then you will only know. See others what they are also telling. Relinquishment means what? Relinquishment means I will lose the right on that. I have a rights offer letter. What is the significance of this rights offer letter? Section 62, subsection number 1, class number A, class number 2 will talk about rights offer letter should be sent to the shareholders. Okay, within a time period, minimum 7 days for acceptance, maximum up to 30 days. Okay, 40 days will be given in the section, 7 days is given as per the rules. So, minimum 7 days time you should give for response, maximum will be 30 days. You might have already read section number 62. Now listen to my words clearly. Okay, important. See, I have a rights offer letter. Why I have rights offer letter? Because I am an existing shareholder. Oh, how many shares you are having? 1,000 shares. How much is the ratio? 1 is to 2. And for every 2 shares, 1 share will come. Yes. So you should have how many offer letters with you? 500 offer letters. How many you have? I have 500. Sorry. With this 500 offer letter, what you will get? I will get a right to buy the right shares at a lower price than market price. Oh, if you don't have money, what you will do? I will transfer to some other person. What you will do? I will transfer. What you will transfer? Right shares. Shares I did not purchase. Yeah, I have no money. I will transfer this right to buy to another person. Right to buy to some other person. Now, what you are transferring? Share, right to buy a share. Right to buy a share. So that is a relinquishment of a particular asset. What is the rights? What is the rights offer letter? Rights offer letter is a asset. What asset? This is an asset which gives you a right to buy an asset. Which gives a right to buy an asset. Sir, what is this, sir? Rights share is an asset. Rights offer letter is also an asset. No, sir, your argument is wrong. Hold on. I will give an example for you to understand. Okay? Listen. See what happens now in real life. In real life, I'm talking. There is a movie which will be released in another maybe 10 days. Let us say 10 days later, there is a movie to get released. Getting released with extreme hype throughout the India. Everyone is waiting for the movie. அந்த மாதிரி hype இருக்கு. Say for example, so there is a super movie which is releasing with extreme hype throughout India. Okay, now what happened is pre-release function was held exactly 10 days before the movie release. Grand they have conducted, and they are conducted in various cities in India. Everyone in India is waiting for that movie. Okay, 10 days prior, pre-release function happened. 7 days prior, booking opened in Book My Show, District, like that, all the apps. Booking opened 7 days before the release. Clear? Okay. When it was opened, immediately people fell on the Book My Show and District app. They purchased. They purchased. Okay. Now Kaushal Mukesh purchased 10 tickets through two different accounts. And 12 tickets I purchased for that particular movie through Book My App Show, the Book My Show app. So through Book My Show app, I purchased 12 tickets. Two mobile phones I directly purchased. Six seats maximum limit na Book My Show. So six I purchased. 12 tickets I am having. Okay. How many days before? 7 days before. Okay, very good. Now movie is there. 7 days before I have ticket with me. What is the ticket? Ticket is a movie. Yeah. Ticket is not a movie. Ticket is a right to see the movie. Ticket is a right to see the movie. Very good. Now 12 tickets I am having. I am holding ticket with me. Everyone is wanting the ticket. Everyone wanting the ticket. Okay. One person came to me 7 days before. He said, I heard that you are having excess tickets. I said, yes. He asked me, how much? I said, 1000 rupees each ticket. 1000. Book My Show, 300 rupees. I book my show. Okay. This is not Book My Show. This is book your show. So I have to give you. Then only you will go to the movie. There is already extreme scarcity for the tickets. I am having 12 tickets with me. How many do you want? I asked. He said 5 tickets. 5 into 1000. 5000 rupees you have to pay me. You should have outside only 300. Where it is available outside. If you want to go there and buy. He said, no. I'm very sorry. 5 tickets I want. Please give me a discount. I said, 0 discount. I don't give anything. 5000. He said, okay, I don't want. Sorry, I said, get lost. Over. 6 days. Movie release and this time gap is reducing. More hype will be created. I increase the price to 1200. Okay. 4 tickets were sold. 6 days before over, 5 days before. Much more hype. 1500 rupees is the ticket price. Okay. I sold another 2. Like that, another 4 tickets are still left. 3 days before, 2 days before. Day of the movie release, also one person came. 10,000 rupees guy sold. He's a huge fan. Die-hard fan. I took the sentiment as an advantage and I sold the ticket for 10,000 rupees to him. Okay. What is a ticket? Ticket is a right to see the movie. Now I transferred the ticket. I purchased each ticket at 300. I sold the ticket to another person at 1200. Means I am selling an asset. I am selling a right to buy an asset. I am selling a right to buy an asset. I am selling right to buy an asset. Why this right? Why this right is increasing in its value? One day you said 1000, next day you said 1200, next day you said 1600, next day you said 5000. Why you are increasing? Because movie is increasing in its value because of its hype. Movie is the asset. This is called as a right to buy the asset. When asset price is moving up, right to buy the asset also will move up. When asset prices comes down, right to buy an asset also will come down. When asset sale is a transfer, right to buy an asset sale is also regarded as a transfer. But here it may not be called as a sale, it will be called as a relinquishment because I am losing a right to right to buy an asset. I am using a right on a right to buy an asset. Therefore, this also will be treated as a transfer only. So any relinquishment of right will be treated as a transfer. But here one catch point. Now I am the owner of that ticket. I am the owner of that right to watch the movie. I transferred it to you, took money. Now what happened? Relinquishment law, what happens now? I will lose the ownership. Some other person will get it. Extinguishment law, no one will get the right to. Both of us will lose the value. Classic example, share capital reduction. Whenever company reduces its share capital, share for me is reduced means share for you also it is reduced because reduction is extinguishment of the asset. It's not just a relinquishment. Relinquishment, I am going to lose the value, but some other person will take it. Extinguishment, no one will get the benefit. Did everyone answer? Yeah, understood or not? Okay, and what is the significance here? Relinquishment la I am not having a right. Some other person will get. Extinguishment la no one will get. Okay. So that's why I have written that red point is there na CIT versus Rasiklal Maniklal Supreme Court case law. What it was written? In case of relinquishment, asset will be given up by the person and continues to be held by some other person. Extinguishment la it will not be there. Extinguishment is a transfer. Extinguishment generally means total destruction, termination or extinction of capital asset. Extinguishment is used in relation to rights and not a asset. Example, reduction of share capital. Okay. Next. Reduction of preference share is a sale, which is a transfer. Reduction of share capital, extinguishment of rights. Karthikeya Sarabhai versus CIT. We will see this because the reduction of share capital is there in our syllabus. We have to read that. Distribution of capital assets. Okay. Upon firm dissolution, that is also regarded as a transfer. How they are, we will see in the respective areas. Okay, first of all, read this notes. Completed everyone? Everyone completed, understood the difference between relinquishment of a right and extinguishment of asset. Extinguishment of rights or relinquishment of a rights or asset. Everyone clear? Next. Okay. See, we have now completed transfer definition of section 2, class 47, class number 1 and subclass number 2. Read it properly. Okay. Next one. Next one. So first we completed sale, exchange and relinquishment of asset. Next one, extinguishment of any rights therein. Okay. Next. compulsory acquisition thereof under any law. What is this? See here. Compulsory acquisition of capital asset. Okay, I said very clearly will be discussed in detail in section 45. But I will just give you overview of what is this. Listen carefully. State government of Andhra Pradesh, listen carefully to my words. Okay, you can understand the live example. State government of Andhra Pradesh wanted to establish its capital in a place near Vijayawada called as Amaravati. Okay, they wanted to establish a capital there. They wanted to develop a capital city near to Vijayawada city, which is called as Amaravati. Okay, for that purpose, what they have done, they started pooling lands. They started pooling the land. What do you mean pooling the land? Pooling the land means, for example, I'm telling you. If this is entire Andhra Pradesh, there they want capital. If you go zoom into the capital, how it is, this is a capital area. This one, this box. Inside they wanted to create a capital city. But there are a lot of agricultural lands around them. What they have to do? They have to acquire all these agricultural lands. They have to pay money to them, and then they can construct the capital in that. What government of AP has done? They pooled 33,000 acres of land. Really this happened. Okay, how many acres? 33,000 acres of land they started acquiring, and they said that they will develop capital there. Okay, at the end they did not do anything. That's a different story. I'm telling only the facts. What are happened? That's all. No creation of any controversy. Fact I have to tell now because I live very near to that. Nothing has happened. Zero. Only thing what has happened now, they started constructing one high court like that. Basic constructions they have done. That capital city is 100% impractical. That cannot happen. We are discussing only about logic behind the law intention of putting compulsory acquisition. Okay. No reality fact checking behind whether it is actually done or not done. What are all these we are not discussing now. Okay. Listen. Government of Andhra Pradesh went to two farmers in Amaravati city. Amaravati, it's a village actually once upon a time. It's a village. So it went to all the farmers living there. They said, we will acquire your land. We will develop capital city. Capital city once get developed, you will get share of a land in that capital city as a compensation for your agricultural land. You gave agricultural land, correct? We are giving you commercial land after developing the capital. So for that, if you give land to us now, we will develop the capital city, prices will boom up, and we will give some land. I can't give one-on-one basis. See, 1 acre of agricultural land, I can't give one acre of commercial land bit. I will give you 400 square yards for your 1 acre land given as an agricultural land. So you give that, I will give you this. After 4 years or 5 years or something they will tell. Okay, something they will tell. That is something, really a something. Nothing has happened till now. To be very clear and to have the facts with us. See. Now what happened? Now government of Andhra Pradesh will tell to them, we will compulsorily acquire the agricultural lands around Amaravati. What is compulsory acquisition? We don't want your consent, whether you wanted to sell or not sell. Okay, we will take it. We will take it by what? Compulsory acquisition. We will acquire. That's it. Compulsory acquisition skill we will acquire. At that time, a farmer like me received an agriculture. They have taken my agriculture land. They paid me some money. There, I purchased agricultural land which was compulsory acquired at 1 lakh. I received 3 lakh. Balance will become what? 2 lakh capital gain. So, compulsory acquisition will be treated as a transfer. So, tell me, what are all these? Exchange is a transfer. Relinquishment is a transfer. Extinguishment is a transfer. Next. Transfer on compulsory acquisition. compulsory acquisition of any asset time, like if you make any capital gain on government compensation, then that also will be chargeable to tax. Next. Next one. Conversion of capital asset into a stock in trade. In case where the asset is converted by the owner thereof into or treated by him as stock in trade of a business carried on. See, here what is happening? Here also conversion happening. There compulsory acquisition, here conversion. Conversion and what is the meaning? Conversion, what is the meaning? Listen. Previously, it is a capital asset. Previously, it is a capital asset. Falling under which head? Capital gains. What will happen if you sell? Capital gains tax will be levied. Okay. Capital gains tax will be small amount or big amount, a very big amount. Yeah. I will purchase asset for 30 lakhs. I will sold for 1 crore. 70 lakh profit I will get. Are you understanding that? So therefore, what department has said, what government of India said, if you convert any capital asset into stock in trade, till today it's a balance sheet item. Suddenly it has now become a P&L statement item. Correct? Means previously it is a balance sheet item because it's a capital asset. Now you converted that into stock in trade, it becomes a P&L item. It becomes a P&L item. If it is a capital asset, sale involve capital gain. Just to escape that, if you convert that into stock in trade, what they said, na, in case where the asset is converted by the owner thereof into or treated him as stock in trade of a business carried on by him, such conversion or a treatment will be regarded as a transfer. So, what is a transfer? Transfer is if any kind of capital asset, okay, is converted by its owner by treating it as a stock in trade. The moment it is treated as a stock in trade, from then that conversion will be treated as a transfer. Next, maturity or redemption of a zero coupon bond. I have one super example for you. Listen. Okay, see, what is a zero coupon bond? FML we already read. DDL previously we already read. But again, I am reiterating the concept for those who missed the previous parts. Zero coupon bond issued at a discount, redeemed at par. Repeat the statement. Issued at a discount, redeemed at par. Issued at a discount. It is issued at 20 rupees only. Okay, issued at 20 rupees. Redemption value is how much? 300. And then technically, you are purchasing at 20, reselling to the company at 300, 280 will become capital gain because it's a maturity of zero coupon bond. Zero coupon bond, separately I don't give anything. I will give you at a lower value, redeem at a higher value. Balance become capital gain. Okay, wow. Up to here, please everyone tell me. Understood clearly? So we completed sale, exchange, relinquishment, extinguishment of any rights, compulsory acquisition under any law, asset converted into stock in trade, maturity of a zero coupon bond, transaction involving the allowing of possession of any immovable property to be taken or retained in part performance of a contract. About this 5 and 6, take a minute time and read. We'll go with the analysis. Please read properly point number 5 and 6. Read them properly. 3 minutes time I am giving 1.5 time, 1.5 minute time for each point. Bye everyone. Okay, bye everyone. Okay. Listen. First of all, sale is a transfer. Clarity. Exchange is a transfer. Clarity. Relinquishment, we are losing right. Clarity. Extinguishment, complete losing the destruction of that asset. Clarity. Conversion of capital asset into stock in trade. Character is changing. Previously, it used to be in the form of capital asset. Now it is in the form of stock in trade. And in the balance sheet, there is an item before. Now that item is not there. Really, you did not sell. Really, you did not sell. But character of the asset is changed. See, I will ask a question here. I will ask a question. Simple question I will ask. Tell me. Balance sheet, you are having land. Hey, everyone reply properly. Okay. See, if I ask a question, why stock in trade as a capital asset converted into stock in trade is a transfer? If I ask, 100 la 99, if not 100 on 100, don't know the reason. Okay. They know that transfer of the conversion of capital asset into stock in trade is a transfer, they might know. What is the reason you don't know? I'm trying to explain you. So listen carefully. I will ask a question, first answer. Balance sheet assets side, land is there. I sold it. Immediately, if I sell and then prepare a balance sheet, land will be there or will not be there in the balance sheet. Land will be there or will not be there in the balance sheet. So you should answer whether if I have a land on my balance sheet asset side and if I sell it to some other person. After sale, if I prepare a balance sheet again after recasting the figures, will land be there in the balance sheet? Yeah, land will not be there. Kada. And what you understand? Whenever we lose the right on that asset or when we sell that, balance sheet that will be missing. Now you have converted capital asset into stock in trade. Means capital asset is coming in the balance sheet side. The moment you convert it into stock in trade, it goes to P&L account. Correct? And what should be in the balance sheet before is now not in the balance sheet. Previously, sale example of what happened, land there, land not there. Now also capital asset there, capital asset not there. But there you really sold. Here I did not really sell, I just converted. But lawmaker said transfer includes a fiction. In reality, conversion is not a sale. Conversion is not a transfer. Conversion is character changing, but still the character of the asset is changing. Na? That's it. Section will get attracted. It will be treated as a transfer. Did you all understand or not? I want a reply. I look for all your answers. That's the meaning. That's why conversion of capital asset into stock in trade. Some are asking questions. Huh? Okay. Okay. Now listen carefully. Okay. Now I will ask a question. Okay. Now I will ask a question. Answer. Okay. Some are asking question. Sir, if we say sale as a stock in trade, then PGBP also will apply. PGBP also will apply. This will apply. Who said no? If you sell stock in trade is in trading P&L. Trading P&L, if anything happens as an inflow, it will be taxable. Yes, correct. Yes, correct. Yeah. But when it is actually sold, completely it is not taxable under the head PGBP. Some part will be taxable under the head capital gain. Some part will be taxable under the head PGBP. What part is getting taxable under capital gain PGBP? That we should not read now. That we have to read in the separate place where we are going to read conversion of capital asset to stock in trade. Then it will blow your mind. Blast, blast. Okay, I will show you. When no double taxation, wrong. Wrong, wrong, wrong. Someone is giving answer double tax. That's double taxation illa. Full taxation broken into two halves. Some part is taxable under the head PGVP, some part is taxable under the head capital gain. That's it. They are not doubly taxing the same amount. They are taxing one amount in two parts. There is a difference. Are you understanding, everyone? So to what part it will be taxable under capital gains, to what part PGBP, that we will discuss when we come to that section. So conversion of capital asset into stock in trade asset, why it became a transfer? Because it's losing the character in the balance sheet. Sales situation, what is happening? Balance sheet la asset is losing its character. Conversion also, what is happening? Asset is losing its character. That's it. So when both sides character of the asset is missing, why can't I treat conversion as a transfer? And the money department is thinking. Are you understanding that? Okay. Now someone is asking another question. Conversion of stock in trade into capital asset is a transfer. Pakka is a transfer, but governed not by capital gains chapter, governed by PGBP section 43 CA. Section 43 CA. We will read that in capital gains only, but in our syllabus it is there in PGBP. Number of the section 43 CA. What is 43 CA? Conversion of stock in trade into capital assets. Okay, conversion of stock in trade into capital asset. At that time, different treatment will come. We will see when we come to PGBP. Okay, wow. So now come back. So first, sale is a transfer. Exchanging is transfer. Relinquishment of asset, transfer. Extinguishment of right, transfer. Next, compulsory acquisition, transfer. Conversion of capital asset into stock in trade, transfer. Okay, very good. Next, maturity or redemption of zero coupon bond. Zero coupon bonds are issued at lower price, redeemed at par. Difference will be capital gain. Next, fifth, sixth period, we can close this segment. Fifth, any transaction involving the allowing of possession of any immovable property to be taken or retained in past performance of a contract of the nature referred to in 53A of Transfer of Property Act 1882. Okay. See here. Oh, sorry. There is an agreement in writing. There is an agreement in writing between buyer and seller. Okay, between buyer and seller. Pursuant to that agreement, seller is giving possession of that property to the buyer. Buyer paid an agreed consideration to the seller. Start again. There is an agreement between buyer and seller. Okay. Pursuant to the agreement, seller is giving the possession of the property to the buyer. Seller is giving possession to the buyer. See, buyer, seller enter into agreement. In that agreement, they said that seller will give the possession of the property to the buyer. Buyer paid agreed consideration, but conveyance deed is yet to be executed. Registration is pending. So registration is pending or completed or pending. What is there done? You paid. I gave you the possession of the asset. Ownership not yet transferred, but still transfer will be completed. But still transfer is said to be completed. Okay, sir. What does it mean? Legal ownership is transferred or not passed? Or not yet passed. Sir, when legal ownership is not passed, it's not a transfer, no, sir. Then what happens? Okay, read these points clearly. I will ask one question. I will know how many of you are thinking in a proper way. Okay, thank God I did not write any explanation below that, revealing the answer. Very good. So read this, read all the 4 points. Okay, enough time given. Hope you read. Okay, see here. Main point is you should understand with what intention lawmaker might have brought this first. Okay, there is an agreement in writing between buyer seller. Sorry. Pursuant to that agreement, seller is giving the property to buyer. Consideration also paid. Conveyance deed and a document of transfer of ownership is not a transfer and transfer is pending. Even in the case, transfer will be completed under capital gains chapter. Okay, fiction is created. Okay, listen. Logically speaking, what happened in reality? Let me explain. Okay, see, A entered into agreement with B. A will sell the property. Let's say B will pay consideration to A. A purchased this property for 1 crore, sold it to B for 2 crore, 1 crore capital gain made. Okay, 1 crore capital gain made. If you tell A sale is complete only if B name registration is done, who should register? Who should go for registration? A and B should go for registration. If registration is completed, who will become the owner? B will become the owner. Correct? So, therefore, what will happen when ownership is transferred? When ownership is transferred, A will pay the capital gain. Why he will pay capital gain? He purchased at 1 crore and sold at 2 crore. He got a 1 crore capital gain or not? Then he will get a capital gain. Therefore, do you know what these people are doing? intentionally in India, people started postponing the registration. People starting what? Postponing the registration intentionally. They really don't wanted to, they really wanted to register, but they will postpone the registration such that ownership will not get transferred. Ownership will not get transferred. Ownership will not get transferred. Now, what will happen? Sale is incomplete. When sale is incomplete, what will happen? Sale is a capitalist, sale is a transfer, na? But incomplete sale, this is. Incomplete sale is not a transfer. To cover the incomplete sale transactions, intentionally people are doing in India to postpone the payment of capital gain tax. This particular subsection came into existence. A transaction involving allowing of possession, not ownership, of a immovable property to be taken or retained in the past performance means pending only, full performance of the contract is not yet done. Next. Any transaction, whether by member or whether by becoming a member of or acquiring the shares in a cooperative society, company or AOP by way of an agreement or any agreement or in any other manner whatsoever, which has effect of transferring or enabling the enjoyment of any immovable property. Read that. Once you read, I will go into explanation. Okay. Yeah. I have given you full 3 minutes time. Okay. Let me explain now. Just a minute. Yeah. See, any transaction, whether by way of becoming a member of or acquiring shares in cooperative society, company or AOP, or by any agreement or arrangement in any other manner whatsoever which has effect of transferring, enabling the enjoyment of any immobile property. Okay, see here. See, transaction providing the enjoyment of immobile property. Any transaction, whether by becoming a member or by acquiring the shares in a company, corporate society, etc., by way of an agreement or arrangement in whatsoever, which has effect of transferring or enabling the enjoyment of any movable property. Listen carefully. Example question already came. Recent attempts. As usual, students left it because they did not even understand what is the question. See, there is a cooperative housing society. In that, there are totally 1,000 compartments. Cooperative housing society, it will be like a housing board type. Okay, cooperative housing society is like a housing board. Legal ownership will be the cooperative housing society. They are the owners. They will give the house to all the members of that cooperative society. Okay. For each person, one block is one residential unit. Okay. Like the 1,000 members are there, one unit to each. Cooperative society mobilized funds from the members. So from 1,000 members, cooperative society mobilized the amounts and they constructed one very big housing board with their own money. One residential unit was given to each of the person, okay, to enjoy the immobile property. Okay, so to enjoy the immobile property, they transfer the membership. Means each unit is there na, each unit ki we have the right. I am a member, I am a member in the cooperative society. I was given with 502 flat. Okay, I was given ownership of flat number 502. Now what I will do, I will transfer that 502 flat to some other person. I am not telling, I am telling that my cooperative society membership I will transfer. If I transfer the membership, what is happening? He is not just getting a membership in cooperative society, he is also getting a right to enjoy the immobile property or not. That transfer of membership in a cooperative society also will be treated as a transfer. Here, property transfer is not talking. See, transaction providing enjoyment of immobile property. There is a cooperative society, yeah. In a cooperative society, 1,000 members are. In that I am member number 502. What I have done, I am having membership. For that I am having one residential unit here, right to buy I am having. I am transferring membership to some other person. Means what? Now if I transfer my membership, it has a effect of transferring or enabling enjoyment of any immovable property. If I transfer membership to some other person, by having membership in the cooperative society, he will enjoy that immovable property possession. Clear? So the transfer of a membership in a cooperative society, not the transfer of house property. Transfer of membership in a cooperative society will also be treated as a transfer because you are not selling an asset, but you are selling a right to enjoy an asset. That will also be treated as capital asset only. That will also be treated as a transfer. Everyone understood the last transaction, which is a transfer? Everyone? Now you read it. Everyone completed? Okay. So listen, what happens now? You read now? Now I will give you an example. You can understand. Normally, cooperative societies, how they work here, there will cooperative society means group of people will form. Let us say 1,000 people formed a cooperative housing society. Purpose of that society will be to promote housing among themselves, not to general public. Okay, I will give money, you will give money, like that 1,000 people will give money. With that 1,000 people's money, we will buy a very big land. We will divide that into 1,000 units and we will construct housing plots. Each member gave money already. Na? Again, we don't take any money. We will just allot the immobile property to them. They can't sell that property because they are not the owners. Cooperative society is the owner. Cooperative society is the owner. So transfer of a capital asset or transfer of a immobile property allotted by cooperative society, question will not arise because I can't sell that. Cooperative society have to sell because they are the owners. I am not the owner. Second. So that is not the problem here. I am a I am a person who is getting immobile property from the cooperative society. Yeah. Why I am getting? Because I am a member. For membership, what you have to do? You have to buy the shares in the cooperative society. So Kaushal Mukesh purchased some shares in cooperative society, gave money to the cooperative society, membership he has taken. For that reason, they allotted me a particular plot or a flat. Very good. Now what I am doing now? I am transferring my membership to some other person. Kaushik Mukesh will now transfer his membership to some Mr. A. Because of this, what will happen? I am losing a right on that ownership, losing a right on that possession, and it is given to some other person. What is given? Enjoyment of immobile property is there with me previously, but that is now transferred to some other asset, some other person. What is immobile property? Capital asset. So till now, I am having the right on enjoyment. Now you are having. So since the rights are transferred, they treat it as a transfer under capital gains chapter. Everyone are now understood? Everyone understood? Relinquishment of right is this one. What is the difference? There, relinquishment of any rights are covered. Here, cooperative society concept only is covered, or a company concept is only covered. Here, relinquishment of any asset is there. Here, immobile property I am not transferring. I am transferring membership. Actually, there is no asset here. Okay, there is a fiction that is created because having a membership is giving you a right on that asset. Therefore, what they tell, sale of this membership will also be treated as a transfer only. Clear, everyone? Reply. Understood the discussion clearly? With this, we completed definition of a transfer, sale, exchange, or relinquishment of asset, extinguishment of any rights, compulsory acquisition, conversion of conversion of capital asset into stock in trade, maturity or redemption of zero coupon bond, transactions in a part performance of a contract, and any transaction of putting the enjoyment rights to some other person's hands in case of a cooperative society or a company or an association of person. Okay, all these will be treated as transfer. Hopefully, everyone got the clarity. Yeah. First of all, everyone, please tell me. Explanations are not required now. Okay, explanations not at all required. But main content you should tell whether you understood or not. Everyone, I want reply from all of you. Okay, yeah. So with this, we will stop our today's part. Listen carefully. We completed up to transfer. Okay, with examples, everything. What we will read in the next class, transfer when it will become effective from the case laws. Section 48 we will start. After section number 48, we will start with transactions not regarded as a transfer. If you miss the class, the next class, what I told, that same impact will be there. Next to two classes. If you miss the next two classes, gone. You need not attend remaining capital gains chapter. You can stop. You can start with the next chapter directly. Okay, I mean it. Okay, one. Next, today is Sunday. Attendance of students is also lesser. I can understand your problem. Okay, but I cannot stop the class altogether. That's why we started it and we completed decent amount of syllabus as well. For 2 hours we have taken. But one point. Today I am not putting FM class because time has already elapsed and most of the students could not attend. I am getting messages and that's why I am watching the phone every 5-10 minutes. Everyone is putting a message, sir, we can't attend the class, sir. We thought Sunday no class. Actually, I said na previously Sunday no class. Might be that is my mistake only, but I did not even realize that today is Sunday. So because of that, I started the class. But now so many are putting messages, sir, you said Sunday is a holiday, that's why I could not attend. Okay, so that's why I'm stopping FM. Tomorrow morning class will be there. 6:30 in the morning it will start. Okay. So tomorrow's session I will focus only on FM to compensate this. Okay. Tomorrow morning class is on FM only. Tell to all your friends. We are going to start and do the problems on capital budgeting. Okay. So tomorrow morning class 6:30 in the morning I will start the class. For around 2.5 hours or 2 hours like that I will take decent part of the syllabus in capital gains with good amount of problems you are going to complete. Okay, what? Because so many are messaging me, that's why I cannot continue because if they miss na, it is not they are missing, it is me also missing. Because the main purpose of the class is all of you have to listen. Okay. So therefore, tomorrow morning class, I am repeating again and again, don't ask questions in group. Tomorrow morning 6:30 class will be there. Only FM we will consider. Okay, va? Okay. Thank you.